back. Now it's time for Under the Lens, and Sonal has now moved over to the big wall, and she's going to tell us about Astec Lifesciences.
Thank you so much for that. Astec Lifesciences, that is the stock under the lens, and it surged another 12% on Friday after a 20% upper circuit on Thursday, gaining 32% in just 2 days, even though the stock is still down nearly 23% for the year so far. The move came after a bulk deal on Thursday, November 20th, of 3.86 lakh shares on the NSE at about 711 rupees, and several brokers were seen doing intra-folio transfers through the session. Let's talk about the company now. The company, which manufactures agrochemical active intermediates, has been struggling with its financial performance. Revenues for the first half of FY26 stood at 165 crore rupees against 381 crore rupees in FY25 and 458 crore rupees in FY24 itself. You can see the numbers on the screen as well. EBITDA, that remained negative at 18 crore rupees in the first half, which compares with a loss of 66 crore rupees last year, while FY24 had posted only a marginal profit. Net losses continued with a 57 crore hit in the first half itself, following a loss of 135 crore rupees in FY25 and around 46 crore rupees in FY24. The management has attributed the weak performance to a cautious stance taken by contract manufacturing customers. Over the last 5 years, sales have declined at a CAGR of 6% for the company. Operating cash flows in FY25 was at a negative 8 crore rupees as well. And the ROCE, that is the return on capital employed for the year, came in at negative 13%. The company also continues to carry net debt of around 375 crore rupees. That's a big number and almost equivalent to the revenues of the company as well. Its financial position received some support through a rights issue of 249 crore rupees in July 2025, which was raised in a 1:7 ratio. However, they have raised it to fund growth initiatives and strengthen the balance sheet. All of it is not enough to actually pay off their debt. They really need to earn more money inside the business, have more cash flows to be able to pay that off. Promoters increased their holding to 72.42% in September from 70.87% in March this year, while mutual funds currently hold just about 4%. But important to note that while the rally has come by, underneath the rally, there are a lot of numbers which are something which would concern the investors.